Welcome to this wonderful panel, which I'm going to introduce briefly. We've got Michael Chang, who is heading up corporate development at NC Softwest. We've got Shanti Bergel, SVP at GREE, and Drew Boortz, Managing Vice President, Western Business Development at Nexon Americas. That's probably, is your business card that long?
It is,
yeah,
yes.
Okay, very good. So I'm not going to run huge intros. I'm just going to get straight into this because we have half an hour. We want to make sure we've got time for some panel discussion as well. But I'll just introduce myself first and why I'm here. So I previously, I'm the CEO of a company called Touch Press. We focus on educational games, but in prior lives I ran an Irish-Japanese co-venture that was acquired by a Chinese acquirer. I worked with the Japanese company Bandai Namco, headed up their networks business in Europe. And as I said, I'm now president and CEO at Touch Press, which has recently announced a $10 million fundraising backed by Emerson Collective PGA Ventures, which is a Chinese venture capital group. I'm going to go straight to Michael here with the first question. We met when you were in EA first. You're now heading up corporate dev at NC Softwest, responsible for M&A and investment. Without breaking any NDAs, how would you in general characterize the differences between corporate development strategies of major Western companies and Asian equivalents?
Yeah, so I came from Electronic Arts before, as did Shanti here. I'll make a commentary that the American companies, they're a bit of incumbents. They've been around for 20 or 30 years or longer. They've built up either organically or through acquisition in the past. So many of them have great confidence in what they have and great confidence that they often don't need help from the outside world. Many of the Asian companies who are coming to the States for the first time or who are expanding, they understand and they realize they do need help and they're more amenable to working with third parties. Again, this is a generalization. It's not always the case. For instance, NC Soft, which is roughly 20 years old, was founded in 1997, I think it was. We've always been out in the West, partnering with Richard Gary at Lord British in the earliest days, and then buying our ArenaNet in Bellevue in 2000 in Seattle, and growing that studio up to about 300 people. So NC Soft's a little bit different in that they've always been in the West and had a Western presence almost as long as the company has been around. But in general, I'd say there's a lot of not invented here or a lot of confidence that there's already enough in-house at a lot of the traditional Western developer publishers.
Great, thank you. Shanti, you've had a pretty fascinating career. It's gone from game development to corporate development. Could you tell us about that path and also some insights into GREE's current international growth?
The path. So the path, I would say, is not a common one. It's a little bit odd to have a deal person without a formal financial kind of background. So in a lot of ways, technically I shouldn't be doing this. So the reason I am doing it is because it turns out that in free-to-play, understanding of operational specifics, understanding game development and how the model works and the market works turns out to be very useful. And so it turns out I should be doing this. But in the classically trained kind of corporate development model, I don't really fit. So that's my personal kind of, background and why I'm, I guess an odd choice, but an appropriate choice for the times. But in terms of, GREE and, our corporate history and what we do, so I joined the company as it was in the midst of, its international expansion. So as Michael says, the problems that GREE was solving for when I joined were one of exposure to the rest of the market. The company was quite dominant in Japan, looking for other places to spread its wings. So I helped acquire a company in San Francisco called Funzio, which formed the backbone of our Western business now, set us up in very important categories for us, which are in midcore, RPG, and strategy, which are great categories for anybody who's in free-to-play, because these are not just categories that are very rich in terms of financially, and the player base really enjoys the games for a long period of time, but also the mechanics and the building blocks of free-to-play are very tightly intertwined, I would say, with RPG. And if you see the ways that these techniques have been applied to other categories, you see, for example, RPG techniques applied to casual, to casino, to other, vectors in the games business. So for us, it was always a great place to start. So we were solving for not just geographical presence, but also kind of strategic presence in understanding operational methodology that would fit into the future of the market.
Great, thank you. And Drew, Managing Director, Vice President, Western Business Development, Nexon Americas. I'm absolutely fascinated by Nexon. It's a Korean-originated company, headquartered in Japan with an American at the helm. It doesn't get much more Asian fusion than that. Can you tell us a little bit more? I actually don't even want to know where you guys go to eat when you're having fun, but could you tell us a little bit more about the company's dual or triple nationality and how it's shaped the international M&A strategy for Nexon?
Sure. For those who don't know Nexon, we are historically a Korean company. We began in the early to mid-90s in Korea making online PC MMO games. Went public in 2011, I believe, in Japan. So there's already one cultural shift there with the difference between a Korean culture and a Japanese culture. If you're unfamiliar with that gap is about as large as the difference between an American culture and a Japanese culture. The idea that there is an Asian culture is not accurate. They are very distinct, and they come with their own mores, their own practices, their own levels of importance on certain things. So there's one shift there. Then we have a Westerner, a former EA guy who I think both of you probably know well. Owen Mahoney is our global CEO. He is based in Japan. So we have Korean, Japanese, and American all trying to come together to make a go of it, which it creates for some interesting dilemmas in our board meetings. With regard to how that impacts our strategy then, there's a couple of points that these guys have made that I wanted to touch on, which is from the perspective of what does an Asian company look for when it's looking for M&A in the West or strategic growth. I would say that our culture tends to look at two distinct paths of opportunity. One is, what are you doing in the West that would be successful and we can help bring East? And that tends to fall into one of two categories. Either it's going to be incredibly successful, a la League of Legends or Overwatch or Clash, or it's not going to work at all. So it's a bit of a zero-sum game there. The second thing we're looking for, and this was hit on as well, is what can we build out that we don't already have in Asia? And this is also a dicey proposition because, as Michael mentioned, a lot of our growth tended to be organic. We come at it of, we built this ourselves, we were leading the charge in free-to-play, let's say, or we were doing something before other markets. So it can be a difficult road to hoe if what you are trying to sell us on is, here is a strategic capability you don't have that we can provide for you. But if you're able to find one of those two paths, that will resonate with us very strongly and something we'll be incredibly excited about.
Yeah, that's a good segue into general investment strategies and criteria. You look at some companies and think, okay, there's a really good long-term strategic plan here. You look at some companies that are reactive to market trends, and then you look at some, frankly, opportunistic and M&A activity. Hard to figure out what the question is exactly, but Michael, do you have any thoughts on striking the balance between strategic, reactive, and opportunistic?
So I have to confess, my preference is to go find companies versus have them come out to me. I'd like to know where I want to go, where I need to expand, where the company needs to expand, have some strategic thought before we go out there and do this. Candidly, a lot of times, it's just companies coming in, so it's a bit of a balance. We proactively go out there and call 45, 50% of the time, and 50% of the time we have inbound opportunities. We try and balance the two out. We have some high-level thoughts about areas we need to expand, areas that are holes in our business that we need to fill. And then, frankly, you can never bet against being surprised when a company comes in and they show you something that you've never thought would be possible, revenues, financials that blow your mind. I'll use an example. Social Point recently got bought by Take-Two. I would have never thought they'd have that much revenue and profit when they came in, let alone that much cash on the balance sheet. It was amazing, right? Company in Barcelona, we knew they were doing decently well. No idea how well they were doing until they came in. It's just, wow, great.
So same question? Yeah, so I think, our interactivity with the marketplace is similar. We view all interactions with developers as potential opportunity, and we try and view it as, what is it that we could do that is unique together? So we try and look for the potential of any potential relationship. Sometimes, you know, there isn't kind of something to do now, but there might be something to do later. Some of the outcomes that we have managed to create are the result of kind of long conversations around, you know, like we had an initial idea that was perhaps an acquisition or an investment, and it turned into like a publishing relationship. Most recently, we did an acquisition of a game last year called Dragon Soul. We didn't acquire the developer, we just bought the game from them. This is an example of one of these kind of tactical outcomes from a more strategic conversation. So it turned out that what was in the best interest of both our company and theirs was for them to sell us the game as an asset, as a way of funding the follow-on activity of their company. So they had been looking for funding out in the marketplace, had a hard time raising equity funding, didn't really like their other options, realized that this could be a source of basically development runway for them. And it also helped clean up some corporate issues for them as well in parallel. We all kind of realized this solution as a result of, you know, this type of approach, fairly consultative, trying to basically find something interesting with people who we kind of think are awesome. So that's basically our very simple starting point, is if we find somebody who, a team that we just believe in somehow, you know, like whether it's because they have amazing results in the marketplace, things that they've done in the past, there's just a general sense that there should be something there. We'll commit time to trying to create an outcome. It doesn't always work, but in the case of that particular game and team, it created a very non-standard outcome, I would say. You don't see a lot of games sold in free-to-play that way, although I think you will see more now that the market has matured to the point where it's a much more viable thing. But it was a very non-standard outcome to a kind of consultative process, and I think that is basically indicative of how we approach the market as a company. But I don't think we're terribly unique in that. I think everybody up here kind of likes to have a long-standing relationship with people who are talented in the space. And so it's just a question at the end of the day, like how all those pieces fit together. So at that moment in time, you know, GREE had a need for, you know, like a title that looked like that. We believed in that particular category quite a bit. We think that the market depth for that type of gameplay is quite deep, and so we were very excited about working with them on that project.
Yeah, go ahead. There are 2 points to follow up there. The first is it's important to distinguish between an M&A conversation and a publishing conversation. While one can beget the other, one might evolve into the other or devolve depending on your perspective. Those are very different conversations, and how that conversation will go will depend entirely on what the two parties are doing. So in our case, right, in 2015 when we started the acquisition of Big Huge Games and closed it last year in 2016, that was a publishing conversation that grew into a minority investment and then ultimately a full-scale acquisition. When we started, we weren't talking full-scale acquisition, but it evolved into that conversation. You have to leave yourself open for that, but you have to know the highs and lows of each conversational track as you go into it, because if you are talking full acquisition and I'm talking publishing, we're not going to connect. The second thing would be so much of this is relationship driven. And it is worth investing the time with major publishers or potential acquirers to develop that relationship. The first conversation, highly unlikely anything will come of it. But the conversations that you have 2 years in, 4 years in, those are the ones that generally start to bear fruit because our strategic priorities may have shifted, your outlook may be different. The example of Social Point was great, right? It's if they had had conversations 4 years ago, that would not have resulted in a $250 million buyout. But here we are today, and it did.
So I want to just zoom in on one point there. You're talking about the evolution of a discussion from a publishing discussion into an acquisition. Is there an aha moment where you basically say, this is it, we've got to move it? Like, what is the trigger that gets you from one, flips it over from one to the other?
Financial success.
Okay.
Really. I mean, when you get down to it, at Nexon's core, we are a games company. We want to be in games. We want to publish games. We don't want to be purely a passive financial strategic investor, right? You can go and get VC money, or you can go and get money from someone like a SoftBank. But for us, we want to be intimately involved in a partnership to develop great games, publish great games, and then service great games over a long period of time. And just by way of example, some of our games have been operating online for close to 20 years now. Very few companies can boast a 20-year-old game that still makes money. Nexon can. So we look at a very long time horizon, and that's why we start with the Publishing Foundation. While we are open to having conversations of full acquisition or partial investment at various points, if we're starting with the publishing, the aha moment is, wow, you guys are killing it. Let's take this to the next level. Let's just not date, let's get married.
Actually, Barry, if I could, just ask the audience, I normally ask this at the beginning, by sector, how many of you are in, say, mobile, PC, console? Could I ask you mobile? Raise your hands if you're in mobile. Okay. Browser? PC? Client PC? Console? AR, VR? Okay. And if I could also ask how long you've been going to Cash Connect. How many people have been going to 5 years or more of Cash Connect Europe? Okay. 3 years. This is your first year. Okay. So those of you who've gone 5 years, you've seen how this has evolved, right? What was hot 5 years ago was Facebook. 4 years ago, 3 years ago, mobile. 2 years ago, 1 year ago, still more mobile. A little AR, VR. I think now we're in the reality side of AR and VR a bit. It's interesting to see this dynamic, and frankly, we also adjust this dynamic in terms of what we do, whether we invest, whether we acquire, whether we publish. We're looking for things that solve our problems, our needs. At the same time, we're trying to adjust this market just as you are. So we're all in this together, trying to figure out how we all make money, how we'll be financially successful. It is a very interesting dance right now.
Yeah. Shanti,
I mean, it's probably obvious, but I think the reality is a combination of these 2 points. That it's the internal relationship between you and your publisher, or the conversation you're having with a potential strategic partner, and the movement of the market around you that basically creates the difference. So there was no kind of market for acquisition of certain types of content 2 years ago. There might be today. Our interest in kind of mobile capacity on smartphone as a company was very high 4 years ago in the West. It's changed. So now we're much more interested in franchises and revenue and things that are indicative of a mature marketplace. And so the need set absolutely shifts with the maturity of the curve that you're on. So the curve is very young for certain platforms right now. Whether or not there's any revenue associated with them, that's a big question for people like us. So we may not believe yet in things like AR, VR. We may not believe in instant games. These are things that are untested, but that's where the new marketplace is. And that's where the potential is for kind of different types of transactions. But as you get into a more mature market spaces like mobile is now, definitely things shift into kind of the same kind of strategic lens that's applied to PC and console traditionally.
It's probably worth mentioning that I think I'm approaching this conversation with a bit of a bias. You guys might be as well, but that bias being we feel like we're talking to game developers. For those of you in the audience that are publishers or that are vendor companies, those are incredibly different conversations as well. When we are looking at a competitive addition to our portfolio, say we just recently completed an acquisition of a publisher entity in Thailand because our capabilities were not that great on the ground there. We didn't have a history there. We weren't publishing their games in Korea or their games in the West. When we've acquired companies that provide services or provide a peripheral technology for the games business, those are even a third type of conversation. But for the most part, I think at least I'm approaching this as I'm a publisher talking to game developers. If that's not the case, feel free to come and talk to me afterwards. We'll have another conversation.
So, just on the points that have been made here, we had a $30 billion in game deals in 2016. It beat the previous record by 30-40%. 28 billion of that was M&A. And we often hear that half of all M&A deal fails. So was 2016 a record year in creating $14 billion in future write-downs? What do you think the highlights of 2016 were in terms of investing trends and potentially the lowlights?
If I could, for all of you who are in this industry now and in this room, this is an amazing time to be in games. The market has never been larger. You haven't had the opportunity to do this much in smartphones and console and PC. It is highly competitive now. So there's the good and the bad. But what's also good about this, if you're in this room right now at this point in time, chances are you didn't come into this world because it was easy and frothy and going up and to the right. You did it because you're in games. Because it's not easy and frothy and going up and to the right now, and everyone is just having an amazing time. You do have to pick. You do have to pick your battles. You do have to kind of operate on a fewer, bigger, better sort of a strategy here. But there is tremendous opportunity still. The markets have never been larger. Competition has never been more intense. But this is a great time for us. And everyone who was not really serious about games, who came in because it was hot, they came in from software or chips or anywhere else, they're gone. They're taken off. They are checking out. And so those of us who are still dedicated in this space, we have a chance to really kind of sweep it up.
There you go. Yeah, the previous conversation did a great job of throwing everyone a hip check and why this is a depressing time to be in games. I guess from our perspective, it's not. It's a great time. And to your point, 2016 was a banner year. I suspect it was even larger than what the public reports suggest because there were a couple of major acquisitions that were done privately and full terms were not disclosed. So yeah, 2016 was incredible. Whether 2017 can repeat that, I don't know. I don't think so.
How's it looking so far?
So far, it's a little quieter.
Yep.
But I think everyone, if my own personal perspective on this is, everyone is waiting to see whether VR and AR pans out or whether it turns out to be an echo chamber. We certainly are looking at it conservatively right now because we're not convinced that AR will be that breakthrough level of connectedness that we love about games, which brings people together. VR feels a little more isolated than other types of games right now. That's our personal philosophy on it. But I think the industry as a whole is trying to see whether this becomes the next platform du jour and leads to 2018 or 2019 being a new watershed moment in M&A.
So I'll give the kind of technical analysis answer, which is if you look at the composition of the acquisitions that were made in 2016, it gives these massive power laws. So about 7 transactions result in the majority of that number. And so if you look at the marketplace now and you think, well, where are the other companies that would make up the rest of that bucket if we were to try and match it in years going forward, this year, next year? I think the landscape is difficult in terms of hitting that number. But Michael's point is exactly, I think, right. Never has there been an ecosystem like this for generating this kind of openness and player base and income for developers. But the landscape is definitely not what it was in the beginning. So it is clearly one of massive increase in sophistication, massive increase in maturity. It is a mature marketplace across the board, except for a couple of pinpoint spots like AR, VR that are nascent. And so I think that means serious choices for people who are going for the brass ring, who are trying to do something other than build kind of a nice lifestyle business as their development organization, which is a totally viable choice in today's ecosystem. Like a small team working, kind of lower than, kind of top 50, 250 grossing on mobile, you can have a great company and never really hit the radar of people like us. But if you're going for, kind of the big outcome, then you're operating at a level that has, extremely high levels of competition. And that's not a bad thing. It means that you're working probably with a partner, probably with somebody with, lots of operating history, who can bring a lot to the table, but you have to be able to make those trade-offs and think strategically about the outcome that you want for your team, for your development effort, for your franchise if you're building one, and eventually for your company if you want to sell it or engage in some kind of transaction with somebody like the people up here.
Shanti, let's just to focus in on that. As a small developer, let's assume you've got the revenue growth, some trajectory. You're they're very attractive for strategic reasons. What can a smaller developer do to ensure a smooth and successful outcome? Like, how does their house need to be in order as they're working through?
So I think the prior presentation, they gave a lot of kind of tips and tricks for getting your house in order, so I won't belabor a lot of that. What I would say is the things that we have seen in deals that we've done that have been successful is clear alignment around outcomes. Why do you want to do this? And so, like for us, for example, when we acquired Funzio in 2012 in San Francisco, that was a very aligned transaction in that the management team wanted access to Eastern operating methodology, basically, like Japanese kind of LTV tactics, and saw that they would be able to create a much larger outcome in pairing with us than not. And so we were all very aligned from day one in terms of what we wanted to do. They wanted to basically incorporate a lot of techniques from Japan into their games pretty much immediately, and we wanted that. We had insight into their roadmap. We were very aligned around the products that they were going to be building, and so there was very little. There were no real surprises. I mean, I think that is where like the write-downs happen, where the misalignment occurs. Is like when you don't really approach the long-term possibilities of your partnership the same way. Like if one side has got a perverse incentive to do one thing and the other has a different one, clearly you're not going to be aligned. Very quickly things are going to fall apart. And so from my perspective, I think I read something somewhere that stuck with me is like, ask not what you can, what your acquisition can do for you, but what you can do for your acquisition. And I try and take that to heart in terms of like the way that I approach partnerships with people, which tends to come across almost as if I'm negotiating against myself sometimes, because I will pressure people to really understand their motivations. I will ask people to examine where they want to be, year 1, year 2, year 3, year 4. And sometimes, often that will result in them, kind of walking away from the table thinking like, wait a minute, why am I talking about selling my company to this guy? But that's healthy. I think that that's a great outcome because eventually, like those folks come back around with a lot more clear orientation around where they want to be.
There's a perspective issue here where we find a lot of developers in particular tend to view the acquisition date, the close date as, hooray, I'm done, that's it, game over. From the buy side, that's just the beginning. And if you are not thinking the way we are, if you are, to put a really bad face on it, let's say burying the lead on some problems that, well, if they knew about it, they probably wouldn't acquire us, those are few and far between in the beginning stages. If, hey, here's who we are, here's what we do, by the way, there's this problem, but we're looking for some help in fixing it, that is not as much of a turnoff as finding out what that problem is 3/4 of the way through DD, or even worse, after close. So there very much has to be a alignment of perspectives, as Shanti said, that we are looking long-term, 5, 6, 10 years down the line as to what this acquisition means. This is not a payday and go home for us. It shouldn't be for you either.
Barry, you mentioned how many acquisitions fail, and most of them do. In the world at large, most M&A doesn't work out very well. The most successful acquisitions I've ever been involved with are ones where founders and employees stayed for a long period of time. Finding studios that culturally fit acquiring company. EA has different needs and a different culture set than NCSoft. Understanding the needs of the parent company, the cultural fit, and then going and finding those companies that have a similar mentality or thought process event is extremely important. I always tell startup companies that I deal with, or private companies, to be promiscuous. You should date around. You should get to know all the different folks out there. It could be EA, it could be Zynga, Activision, Take-Two, among the Koreans, Nexon, Neois, Smilegate, NHN, NCSoft, the Japanese GREE, DNA, Gumi. Figure out what fits you best. Find that home, find that partner, date around a little bit, and then get married. Because if you don't do a good job of that, it's 2 years and a really unpleasant divorce. And those are the worst acquisitions. And that is why most of these acquisitions fail. Everyone's very focused on the glory, the deal, the announcement, the transaction price. No one ever thinks about how long you've got to be in this to make this a successful relationship.
So don't view an exit or an acquisition as an exit, but an entrance.
Yeah.
Okay. So I want to turn it around for a moment before we open to the floor, and it's not quite on topic, but considering we've got three powerhouses on stage here. Drew, you mentioned Asia's not a market. I've always been in agreement on that. Japan is very different to Korea, is very different to Southeast Asia, to India, to China, and it's unfortunate we don't have any China participation on the panel. Shanti, you were quoted as saying the fact that we don't launch Western games in Japan should tell you something about the opportunity. I tend to agree there. Could you want to elaborate on that a little bit?
Yes, that was a quote from an interview I gave recently. It's really, I think, a function of, again, the maturity of the space right now. So if you look at competition in a given marketplace, in this case Japan, there is a host of local competitors with local insights, local advantages that other people from outside that territory do not have, and it makes it extremely difficult. So as difficult it is to break out in your home market, compound that with multiple vectors of complexity, culture, IP, what have you, distribution differences, etc. And then, that quote was basically talking about, even in our case, a Japanese company with a Western arm making Western games and then trying to bring them into Japan, we have all those advantages in-house, and we don't do it very often. That's kind of the point. It's like, if we're not doing it very often, what does that mean for everyone else? And the reasons we don't do it very often is, A, we're a public company, we might have a higher bar of return than the smaller developer would have, so that may be, a bit of a window. On the other hand, if you look at the games that have made it into, kind of upper ranks in the Japanese App Store, there is definitely a downward trend on non-Japanese content. There are a couple of breakout examples of Western developers doing extremely well. They happen to be the same Western developers that have done extremely well everywhere else, and a lot of them have spent their way to the top of the Japanese App Store. So it's not a great kind of path to attempt to follow unless you have similar advantages to them. Specifically, if you look today, you'll probably see Supercell, Machine Zone, a couple of Chinese companies, and there are a handful of strange exceptions. And maybe you can be one of those, but banking on being a strange exception is more of a hope than a plan. And so I think that's really my point. It's more of a statistical point. Statistically, it's become much less likely. It doesn't mean it won't happen to you if you kind of are the one who is that rare exception. But recognize fully that you are up against in Japan a completely different set of expectations with regard to what entertainment even is. And so there is a deep video game culture, there's a deep manga culture, there is a whole bunch of stuff that you need to be expert at if you want to compete with the guys who are already there and grew up in it. And so that's really the landscape there, and I think there are different corollaries in Korea and Japan. In Korea and China, the culture, distribution, etc. But the basic point is now that speed is no longer the primary competitive vector, and it's back to all the usual stuff. The content of the top 10, the top 20, the top 50, starts to look eerily similar to console and PC, and so that's why we do what we do.
Thank you. Michael, I know you have, and Tsoft recently made some announcements about the China market and partnerships. We heard from Jason earlier on about sovereign issues being a barrier to China. What are the opportunities, and how does one access the China market in terms of either M&A or distribution?
Candidly, for ourselves, we are partnering with local Chinese partners. We have some of our own offices in other areas, Taiwan, other places that are Chinese-speaking countries, but within the mainland China itself, we are definitely partnering in this regard. In fact, one of our greatest successes, or we've done here, is one of our more interesting mobile titles. It's called Lineage Red Knights. Did tremendously well in Korea. We've given that content to a Chinese partner to go and run with of themselves, to go and make it work for the Chinese market. Excuse me. It's quite a bit of an interesting take. We're not supporting the game. We're not supporting the development. They're taking all of it on themselves and making the game work for the Chinese market. We're going to see if that sort of mode of operation really works, but that's how we're trying to experiment. Give it a bit of a go, sorry about that, and we'll see where that goes.
There's an assumption that going overseas means translating your assets into the local language and having some on-the-ground marketing, and it's much deeper than that. We very rarely run a single global build for any of our games. In fact, I don't think we're doing that at all right now. We have at least 4 different builds. One for the Western market, one for Korea, one for China, and one for Japan. While some crossover may exist there, you will find that in a lot of cases, those builds are incredibly different because what works in China does not work in Korea. What works in Korea does not necessarily work in the US, and vice versa. You have to have that depth of inside, on-the-ground knowledge, along with the on-the-ground feed for marketing purposes, community purposes, the translated assets, to make a game work. That's not to say that there isn't an audience for your game overseas. There probably is, but the realistic expectations of taking a Western game east have to be either, are we going to rethink what the core of this game is and make it work for this market, or are we going to play to, let's say, the expat community who will like what this product is being built for an entirely different cultural reference point?
Okay, thank you. We are well over time, but I think because lunch is next, I think we can take some questions from the audience.
Well, first of all, thank you for a very inspiring panel. Yesterday there was a great talk, or a great track rather, about kids games with some great brands and companies and amazing games that are doing very well in the Western market. None of them seem to have made it into Asia. Understanding the difference between China, Japan, and Korea, etc. What's up with kids games in Asia?
I could maybe speak to that a little bit, but maybe privately afterwards, because the kids games market is just extremely tough, particularly if you're looking at touchscreen devices. There are monetization issues abound, there are cultural issues, there are deep localization barriers to it. And certainly in Touch Press, which is now the parent company of Story Toys, we've always adopted an approach saying, actually, we take a market and find a local partner who can reinterpret our content for the market that they're in. It is not a case of us putting a SKU in. Our Japanese operations are completely separate and very successful as a result, because we partnered with local people on the ground. It is marketed locally. The game is completely different. It's HTML5 in the Japanese market on the Docomo D-Kids platform, as opposed to selling out through the App Store. The market dynamics across devices are different as well. So I don't know if that's helpful, but find a partner.
I'm no expert in kids games, but I would hazard a guess, and this is at the risk of being grossly generalizations, or making gross generalizations here, the way in which the different cultures look at child raising and then how games factor into that is very different. And I think there is a tendency in the Western market to view a child's game as being both educational and entertaining, something that can maybe give the parents a break for 20 minutes or something along those lines. You don't see that as much in a culture where the grandparents live in the apartment right next door to the parents, and there is a much a more community-based approach to child rearing. Again, gross overgeneralizations, but I think part of that cultural dimension has to be factored in to any discussion as to why a particular category that is kids games works better in the West than it does in Asia at the moment.
So I mentioned, we have plenty of time. I mentioned in my notes that I sent across your M&A DAR, right? What's on it at the moment? What is really, what's hot?
Actually, I'm going to throw this at the audience. Based on how you're interacting with your peers here, what do you think is hot right now? Anyone? Is there anything that's hot right now? Paul?
It's hard to miss that you guys have taken a PC MMO called Lineage and put that on mobile and absolutely slayed it. So I think that's probably pretty hot right now.
What about you, David? Can I pick on you? Esports. We're getting a lot of esports pitches. Klaus, what about you? Or York, what am I saying? IP. Yeah.
Just want to come back to what Drew said about 4 builds in a global market. What I think is really hard is when you find a game which you can distribute globally just with 1 build, because it's so much work and hassle to really do a deep culturalization. And so far, we haven't seen a proof point, at least not in our internal Flair Games titles. So for our last title, for example, for Non-Stop Night, China is the biggest market in terms of downloads and revenues, and it's the global build.
Hot depends on the needs of the company. The needs of the company will often dictate what is important to them. Candidly, in mobile right now, I used to spend more time in the earlier days on investments, maybe third-party publishing. Today, it's all about acquisitions, mobile studios for me. I rarely look at anything else in mobile. On the PC side, because I have a PC publishing team that has some extra capacity, I can look at third-party publishing. I can look at minority investments or full acquisitions. When I was at EA, frankly, the only thing we considered was free-to-play mobile studio acquisitions, some amount of Facebook. When Shanti and I were working on this, the idea of going out and buying a console developer at EA didn't really make a whole lot of sense, right? So it is somewhat situation dependent on what we need, what are the problems that we need to solve. I'd love to say that we're here to address your issues, to take care of you, as it were. Frankly, we have our own problems, and we're looking to find different folks who can help us solve those problems within our own shops, help us grow revenues, help us expand in new markets.
Yeah, no, I think the hot is local point is extremely valid. But the one thing that is common, at least in mobile, is like what's hot right now is absolutely profits. So if you look at like the way that everybody is looking at like different types of deals, it's absolutely been filtered through that first. Again, function of maturity, it's a different market than it used to be. And so like if you look at primarily the Asian buyers in particular, and probably the Chinese buyers most of all, I would say that is top of their list. They have a fairly unique reason for that, but I think everybody is interested in profits.
So, in speaking about that, and this is a pretty hard question because it may involve disclosures, and it's kind of one of these things that's difficult to measure, but over the course of your company's history in terms of M&A activity, how much would you estimate that it has contributed to the longer-term success of the business? I'm not asking you to put a number on it, but are there transformative deals that were done that really pushed the business from one place to another?
I'm going to take this one, sorry. So I'm no longer at EA, so I can't represent them anymore. But you think about all the studios at EA. DICE, the guys who make Battlefield Battlefront, acquisition in Sweden. Tiburon in Florida, the guys who make Madden football, acquisition. EA Canada, Distinctive, Black Box, a number of acquisitions up there. EA has substantially grown through acquisitions. There's some more recent ones. Well, candidly, there have been no acquisitions at EA in the last 4 years, but PopCap was a large one. Playfish, BioWare, and Pandemic, Backbase. That was a substantial part of growth there. At NCSoft, in the West, our largest studio is ArenaNet in Bellevue, Washington. That was a very small studio in 2000 when the company's acquired. It's now 300 people. So that is a substantial portion of the revenues of NCSoft West through Guild Wars 2, those sorts of franchises. Acquisitions help. I mean, Shanti can speak to Funzio.
Yeah, so similar to the way that companies like EA grew through acquisition, GREE has grown to some degree through acquisition. So, like I said earlier, our San Francisco presence is largely based off of our acquisition of a company called Funzio, created our presence in RPG and midcore in general. We have a title coming out later this year from our Australian studio, which was also an acquisition. And so we're hopeful that they will be kind of a new center of excellence for us in a different category. But, yes, in general, if you approach it with a long-term vision, I think that acquisitions can absolutely be kind of long-term building blocks for the company. If you do things more opportunistically, then I think, the likelihood that it will land exactly that way is a little bit less, perhaps a lot less, actually. And so, if you look at success cases, I think they, again, not to beat this to death, they tend to be because of intentional alignment and shared vision.
it may be because we have a bit of an Asian bias based on who we work for, that acquisitions are a great way to grow. They are important, but they tend to take longer to pay off. Perhaps that's a function of not wanting to pay as much in a premium to get something that drops revenue to the bottom line or explodes growth immediately. But if you look at Nexon's history of acquisitions, it tends to be anywhere from several years to maybe 8, 9, 10 years before we see that acquisition really contributing. But in the end, most of a lot of the recent growth that we've been through has been through some significant acquisitions that happened 10 years ago.
If I could say one thing too, we talk about things in terms of deals right now on the stage. What's a little bit lost in this is those deals represent people. They represent talent. And above everything else, talent, human capital is the most important thing to drive success, whether it be through acquisitions or internal hiring. I'm looking at Rumiko here, who does some of the recruiting work with Stepping Stone. Talent above everything else distinguishes what will be successful long term. High quality designers, developers, artists. I skew a lot more toward designers. I love amazingly talented game designers who understand the cherished history of game design of old. At the same time, they've got a little bit of casino in them. They've got a little bit of evil in them. I talk to them. They make me want to take a shower or, check to see if I didn't get my pocket picked, especially in free-to-play gaming. It's that talent is very rare, and it's worth its weight in gold.
Okay. Any final questions from the audience before we wrap up?
Talking about talent, can you just expand a little bit in your acquisitions, how much autonomy you give the management teams or how you get along as a multicultural team and you capitalize on that?
Oh, this is me. Okay, thank you. It depends very much on who acquires you. Nexon tends to take the perspective that we want to be partners in this, and we want to be involved in what you're doing. We also want you to want us to be involved in what you are doing. We tend to not favor opportunities that are presented to us as, I know what I'm doing, you don't, let me do my thing, and in 5 years' time, here's money. That just doesn't resonate with us. There are other types of investors that does resonate with. But from our perspective of operating games long-term all throughout Asia, we want to be involved and we want there to be a dialogue and a shared perspective on things. How that shakes out in terms of who has final creative control, is it 51-49, 50-50, 70-30, whatever you want to break that down to, is very case-by-case dependent. But we do want to have that level of interaction and involvement in each one of our partners as a general basis.
Yeah, it is a hard question to answer in that, I think it does go back to the plan that you set with, your new coworker who's coming into the company. And, for us, it's definitely, the shared plan that we create throughout the acquisition process becomes the blueprint for answering that question. And so it's not as simple as, we're going to plug this team in here, and they're going to kind of basically operate as a cog within that, that machine. There is, I think a difference in the types of transactions and how they meet what needs and what that implies for your, the type of relationship you're going to have with your new company. So, for example, in the case of Funzio, there was such a large strategic need that they were filling, their mandate within the company was extremely broad, and they had basically a rule set around them that was very flexible. Our most recent acquisition in Australia that I mentioned, they had a goal as a founding team, and they were a much smaller team. It's a team of 20 versus a team of about 200 when they came in. They had a goal of basically creating a single world-beating IP. And so, that was the shared vision. It wasn't around, I want to control, vast swaths of the corporate, firmament, and, make me SVP of X. It was much more about, I have a vision for creating, a type of experience, and I want you to help me with that. And that's what our partnership is going to be about. And that's what it's about. And so it really, for me, again, it comes back to, what is the roadmap that we establish, you know, like throughout the discussion and the diligence process, and then like are we being true to it in the execution? So it is less about, you know, kind of I'm going to just kind of bring you in, you know, change the name on the door, and then let you run like you were before. We haven't done any deals like that, frankly. We might, you know, if that made sense for, you know, again, this kind of shared vision. But so far, it's been much more of a kind of a kind of a strategic complementary relationship. Like, why are we doing this? And the answer basically speaks to how we will interact with each other over time. And it's been highly integrated in our case. I could see, for primarily financial reasons, why you just want to change the name on the door and let people keep running. Just like, all right, now you have a more efficient marketing machine behind you. But for us, that hasn't been strategic enough, a rationale to do a deal like that.
I'll make this quick here. I'm not long in gaming. I joined actually in June 2010, and EA Corp Dev, I thought, hey, what a great place. It was amazing how many people would describe EA to me as the Death Star, Star Wars, or the Borg from Star Trek, in terms of the EA corporate development process as I came in. I'll compare and contrast that with NC. By the way, I don't think it's necessarily fair or true, but I'll compare and contrast that with NCSoft. I tend to think of NCSoft as much more permissive and autonomous. Our ArenaNet studio is an entity unto itself. And candidly, when I'm looking out there for people to work with and companies to acquire and invest in, I'm looking to work with grown-ups. Hopefully you guys are those grown-ups who we can trust to do and make the right decisions, good decisions. You know, we're giving you lots of money, lots of leeway. We're giving you our trust. We're embedding our brand with you. We want to make sure you do a good job, and we need to be able to trust that you are able to do that to keep the faith, so to speak. So trust, autonomy are very important. When I look, and I can't speak for everyone else here, when I look at groups I want to work with, I want people who are industry thought leaders, who are good decision makers, who I'll enjoy working with, I'll enjoy being associated with, not only now, but for many, many years into the future.
I heard an exit once described enthusiastic about an entrepreneur as being, it's going to be great because they would have the resources of a very large company, but the dynamic of a startup. And then a few months later, the description was, actually, we got the bureaucracy of a very large company and the resources of a startup. It sounds like you're not doing it that way.
I only go for companies, I shouldn't say only, I tend to go for companies that are bootstrapped and profitable. Frankly, people who've gone close to bankruptcy, I love them because they understand the value of money. Someone who's been fed 10, 20, 30, 40, $100 million in venture capital, they just think they've hit some gravy train and they're used to a different mode of operations. You know, it's amazing. EA, when we joined, it had quite a large balance sheet. You didn't really get to tap that entire balance sheet for M&A, right? And frankly, when the studio is acquired afterwards, it's not like they hit the gravy train and they can just get anything they want. You know, there's good HR, there's good insurance benefits and other things, but there's a budget. There's an actual budget that they operate on. And EA would do quarterly, monthly reviews, sometimes even more extreme in some cases. So yes, we do have large balance sheets. NCSoft has quite a large balance sheet too, but you do have to operate within some sort of a budget, right? So always remember that.
I'd say the flip of that particular example is, you know, again, about motivation. You know, like being granted a bunch of resources comes with responsibility. And so if you can't live up to that responsibility, then you may not have those resources anymore, and that's life inside a big company. It should be life inside every company. And so, you know, like I think be aware that that's the expectation that's being placed on you as you come into this environment. The other is, as the people who are kind of championing the deal, if your expectations are not met, that's kind of our fault. So like if you go into a deal and you kind of have expectations that you're going to be, you know, like a little company inside a big company and there's going to be no bureaucracy, then probably, and then that doesn't turn out to be true, probably somewhere along the line, you know, the communication wasn't crisp enough. Or, you know, like the deal person didn't have enough juice to basically push the company out of your way. Because half the time, you know, like in a post-transaction environment, that's what I'm doing. I'm making the company live up to the promises that we made our new partner. And so like that is, I think, a very real responsibility that that my team takes very seriously, but it is part of that communication process, being very clear-eyed about, what are you really getting into and what your expectations should be after you get on the other side.
Great. Anything to add, Drew? No. Okay, we'll wrap it up here. Big thanks to our panel for sharing their insights today, and thank you for your patience.